In this video, I'm going to explain what a double bottom pattern is in the stock market. On my screen here is a stock chart, and this is for Amazon. And each of these price bars represents one day of price activity. So a double bottom occurs when the price kind of bounces off a particular price level twice. And you can see here, if you look where my cursor is, and if you look at that white horizontal line going to the left and right of my cursor, you can see that there's this line that connects the bottom of this price bar with the bottom of this price bar. And so it's as if the price came down and it bounced off that line two times. And that's what makes it a double bottom. And so that's a double bottom. The white line can be thought of as a support level. And support levels are where enough buyers show up that it reverses the downward momentum of price and causes the price to go back upward. And so here you can see, this particular example is a really good one because it seems so precise that the second time that the price came down over here, it seemingly bounced right off that same support level. And so that's what makes a double bottom. Now, double bottoms come in all sorts of shapes and, magnifications. So this was a pretty drawn out double bottom because it occurred over, looks like maybe a month and a half from the first time that a support level was established to the second time it bounced off that support level. They could occur over less period, like it could come over like this and bounce that way. It also might not be as high. This was a really high bounce and came all the way back down and formed a double bottom. So they could be less tall and they could be shorter, or they could be more tall and longer. So the key is basically that there's two different bounces off a given support level. And it's said that the more pronounced the support level, the more meaningful potentially that the double bottom is. So this is very pronounced, very clear, kind of V shape here. So this may serve as an opportunity for a double bottom. And obviously it did turn out that way here. So how can you benefit from a double bottom pattern? It depends on where the stock is at that point in time. So right here, the stock chart, you can see this. I went back in history to find this, and this has already moved on. And so, if you looked at this chart right now, this double bottom has already occurred in the past. There's probably nothing that can be done about it at this point. But now I'm going to adjust the chart to show different periods. Let's say this is today. Okay, there's a big support level, what appears to be a big support level here, and you can see the price is coming down. One way is before a double bottom occurs, you could anticipate that it might occur. And so let's see. Well, I went down a little too quickly. Let's say right about here, the price is coming down. You could potentially set, a buy limit order above the prior support in anticipation that if the price comes down to here, you're going to buy it. The idea is that there may be buyers at the support level, enough buyers to cause the price to stop declining and to go back up, in which case you can kind of set a stop loss below that support level so that if it doesn't hold up, you have a clear way to exit the trade. But if it does hold up, maybe you can ride the bounce back up. And so then, the buy order might get filled here, and this of course ended up hitting that support level and bouncing off it, forming a double bottom, and then you kind of ride the wave back up if it turns out. And no trading strategy is going to give you wins every single time. The idea is to put the odds in your favor if it has a track record of success. Another way you could trade it is to wait for the double bottom to actually form. So you could wait. So rather than kind of buying in anticipation that there will be a double bottom, you could wait for it to form the double bottom. And so, for example, at this point, it's been formed, right? It clearly rebounded off here. There's a forceful, rejection or rebound here. So you could wait for that and buy right there. And use a similar concept where maybe you set a stop loss down here so that if it does start to break down, you have kind of a clear plan for when you would exit. And otherwise, you just ride this thing, and you can decide where you would want to set your profit target. You could hold it for a week or a month, or set a profit target here or here. So there's different ways that you could potentially benefit from a double bottom pattern. The question is, do they actually work? Like, do either of those strategy ideas that I just shared, do they actually work? And that's one of the things we do here at Stock Market Guides. Rather than tell you an idea and say, it might work, or to hype it up in some way without facts, what we do instead is share the idea, and then we just give you the facts, and then you decide for yourself if you like the idea. And the facts that we give are, we go through each stock and we say how many times a double bottom has occurred in the past for that stock, and in each of those times, how did the stock perform thereafter? And that way you can see the real truth, the data, the facts. And then you can decide for yourself, is this a trading setup that's worth considering to you? Does this appeal to you? Do you think the odds would be in your favor for making a profit by trading based on that trading setup? So that's what a double bottom is. If you have questions about how it works, or questions in general about the stock market, we would be happy to help. You can contact us anytime. Our email address is support@stockmarketguides.com.